Well, you heard the deal, but what is fueling that Citigroup deal? The Arab nation of Abu Dhabi investing $7.5 billion in the bank. It could be because oil is near $100 a barrel.
Although pulling back $3 today.
Yeah, going down.
Not getting there just yet. But this could overall mean that you are funding Middle Eastern investments every time you fill the gas tank in your car. Here now to talk about this, Mike Santoli, senior editor of Barron's. We also have Pat Powell from Powell Financial Group, along with Gary Kaltbaum of GaryK.com, and Peter Schiff from Euro Pacific Capital, and author of the book Crash Proof. There you go. There's the cover of Crash Proof. You always got to show that, right? I'm going to start with Mike Santoli because from Barron's, he's a new guest on our show. We're thrilled to have you.
Glad to be here. Thanks.
What do you think? I mean, is there now this direct correlation between filling your gas tank, or was there always a direct correlation with the Middle East?
More than ever. Obviously with oil prices having tripled in a few years, and those nations over there really not incurring too many more costs to actually pull in that dollar revenue, they have a surplus of dollars, and they've, in this organized way, decided to funnel it around the world in investment opportunities. That's obviously made its way back here this time, yeah.
Pat, this isn't the first time something like this is happened. Back in 1991, we had Prince Alawid given a lot of money.
Prince.
Exactly. So there have been cases like this before. We overreact. At first shock, it's, gee, are they taking over our financial system?
Well, they're not taking over our financial system, but this is a penalty that you pay when you mess up, and clearly Citigroup has messed up in here. So they're cheap. It's a smart investment, for, I think, from somebody coming from...
Citi is cheap right now.
Citi is cheap. The deal isn't quite as lucrative as it first sounds. I know they're getting this 11% coupon on the way in, but the convertible rate is at 37.24. So it's a significant premium over what the stock is currently trading at. So Citigroup has to move up for this to be a good deal for the investment authority.
Gary K., in the 80s, people got extremely hyper about the Japanese buying up 30 Rockefeller Plaza. I mean, that was the big sort of message that people got upset about. Is this just that happening again, only with the Middle East?
Absolutely. Look, the Middle East has won the lottery, and they win it every day as prices stay high. And I have to tell you, it's capitalism working at its best as far as I'm concerned. They are leveraging what they have to buy into companies here that are not doing so well. And in my opinion, I think Citigroup may have been on the precipice here in the last couple of weeks, and I think there was an urgent need for $7.5 billion. Just remember, they're giving 11%. That's not junk, that's double junk. So that urgent need made this happen, and made this happen quickly.
Peter Schiff, just a couple of weeks ago, Citi was trading at 47, now trading at 30. That's a loss of $85 billion in market cap value. That's a huge loss. Was that down too much, or do you think it could go down even more?
I think it's going a lot lower. I think this is a Band-Aid. But, I think this is symptomatic. It's not just Americans buying gasoline with borrowed money. What's happened for years, we've squandered our wealth. We've been borrowing money from the world to consume, and now our foreign bankers are cashing in, and they're buying up American assets. And they're going to buy a lot more than just this stake in Citicorp. Who knows? By the time it's over, they might own the whole thing. But they're going to own a lot more of our companies. They might own the majority of the Dow Jones before it's over. We have borrowed a fortune from the rest of the world, and we can't pay it back, and they're going to collect our assets. And unfortunately, this is a bad thing for America.
Let's bring it back to oil. And Mike Santoli, as you look at what people are now having to spend at the gas pump, and it's supposed to get worse, although we haven't seen it yet. Gasoline is at least upticking about 2 pennies, down-ticking 2 pennies. Yeah. But today, crude is down $3. Yep. People are going into debt having to pay their gas bills.
And I think that right in the immediate future, the gasoline products like heating oil, petroleum products like heating oil and gasoline are going to be a squeeze on the consumer. I've been saying that crude oil was overextended for about 4 weeks when it was 94, went to 98, back to 94. I do still think that relative to other commodities. Obviously, the weak dollar is giving a prop to that. So it's an economic problem domestically for the moment, but I do think we might get a little bit of psychological relief as crude pulls back in the next couple of months.
And, Pat, one of the reasons that oil is down today is that there is going to be this OPEC meeting where they're concerned that the price is so high it's going to put a strain on the economies that buy all their oil, so they might increase production, create a little bit of glut to get the prices down.
They might, but the long-term trend is still the same. The long-term trend is we keep consuming more oil, not just the United States, but worldwide. And until that trend changes, the long-term trend is still going to be higher in energy, even if we get some pullbacks in the short run.
Gary K., People get touchy, sensitive. We saw that with the Dubai ports deal that never really happened. That's a dangerous thing when we start blocking even the Middle East from trying to buy into U.S. opportunities and companies.
Yeah, look, this is a global environment for investing right now. You can't just say no to everything. Now, the Dubai ports, that was one thing. It was about security. I'd say this is a little different. If we start to see more of this, I am sure you're going to hear Chucky Schumer out yelling and screaming about, you know.
Hey, a lot of Republicans fought the Dubai ports deal as well.
I don't argue that point either. But I'm just saying I think you'll hear a lot of noise if more and more of this happens. But once again, I want to get back to the point. I think this was a lot about urgency here. And I'm on record. I think within the next 30 days, you're going to hear about another $10 billion fall by the wayside for Citigroup. I do not think they have owned up to all their problems yet, and I think there's a lot more to come.
By the way, we should mention that Schumer is behind this Citigroup deal.
Peter. You know, Peter, a lot of folks who are in New York are excited about this deal because they think, okay, this protects a U.S. company, including Senator Schumer.
Well, it doesn't necessarily protect it. You know, they've got to make that 11% coupon payment, and this isn't interest; it's dividend money. It's not even tax deductible. But if they can't make those payments, you know, they're gonna wipe out all the common shareholders. This isn't a free lunch. As I said, they might end up owning the entire company.
Well, and as Pat said, unless they can get the price up to 37, it's not a good deal for them.
It doesn't make any sense to do the conversion.
If they can't, we have to make the coupon payment. If we can't make
the coupon payment, Peter, hold on a second. Peter, we have to understand what this is here. This is a bet. The Abu Dhabis are making a bet, one, that the price is going to go up to 37, and two, that Citibank is going to remain solvent. If Citibank doesn't remain solvent, as you're suggesting, they lose everything.
Well, it depends. You know,
it doesn't depend. They lose everything if Citibank defaults. That doesn't depend.
They're in front of the line. They're behind the bondholders, but they're in front of all the common shareholders. The stock doesn't have to go up. They get an 11% coupon. For all I know, they want the stock to go down even more so they can buy more of it cheaper.
Okay, let me tell you something shocking, everyone. Fannie and Freddie Mac are moving higher today, albeit slightly, but federal regulators are giving no wiggle room at all from Fannie Mae or Freddie Mac to help the housing market.
We'll explain what happened. There's a lot of people unhappy next on Fox Business.